Good morning, traders and investors. My name is Roger Scott, and I'm the senior trader for Wealth Press. Today is Wednesday, May 11th, and it's about 7:53 in the morning. The market's going to open up in an hour and 37 minutes, if I am correct. And by the way, I want to say a big hello to everybody who's watching these videos from abroad: Canada, Europe, South America, Eastern Europe. I want to really thank you guys. I really appreciate all the feedback. I've been getting some great letters from you. If you guys are enjoying this video, if you have a question, if you want me to premiere something on this segment, send me an email. It doesn't cost anything. support@marketgeeks.com. I want to make sure that I'm helping you the right way. Anyways, let's talk a little bit about the markets. So today's a big day. Why? Well, first of all, the markets are up, but that's not really why, because we know based on our past experience, just in the last couple of weeks, they can turn on a dime. But what we do have is we have the CPI coming out in about 36 minutes. The CPI is going to tell us if inflation is going higher, if it's getting out of whack, or if it's cooling off. There is some talk on Wall Street. I did see some articles earlier today that are pointing to potentially or inferring that inflationary pressure may have hit an all-time high and we may be now going down. That would be great. I don't know if that's the case. But here is what the expectation year over year. I don't really care what it is month over month. That's noise. But year over year, we're looking at 8.1%. Last time was 8.5%. Now, if the number is really out of whack to the upside, in other words, let's say it's 8.8, okay? Then the Fed's going to say, we told you so, we've got action to do, we've got more curbing to do. But if the number's lower, if the number's, let's say, 7.9 or 7.7, they may say, hey, you know what? The economy's moving okay right now. Inflation is not as bad. And maybe we're not going to go as heavy on the bond, on the raising interest rates, right? So CPI is a very instrumental factor in the bond market. And as we know, the bond market is what drives the stock market. Now, so again, the expectation is 7.9, 8.3. The target is 8.1. If it's on the low end, we could potentially have a nice little rally. If it's on the real high end, then we're going to get a rally from the bond market, and that's not going to be very good. Now, looking at the bond market, and as you can see here, the stock market Dow's up 300 points, although the daily volatility has been close to 600-700 points. So that doesn't count. But we are starting to see some upside from the bond market, as you can see here, which is great. I love it. I actually think, let me see if I have there we go, something more normal. It's been going up, and I'm hoping it'll go up a little higher. It has a very strong divergence between price action and itself, and I'm hoping that this divergence is going to resolve itself to the upside. Typically, when you have higher highs on the oscillator, typically we have a bounce. So if the number is really solid to the low end, if it's lower than expected, if it's, say, 7.9 or lower, you can expect a rally from the bond market. If that number is higher, then we already know the Fed's going to start going real heavy. And then that means the bond market would go lower. So keep your eye on the bond market as the number comes out at 8:30. This is TLT, and pre-open it's up 88 ticks. And you'll see if the number is really high, this number will start moving lower pre-market. And if it's lower, then this number will start moving higher. And you can also look at you don't have to look at the TLT. That's an asset. You can actually look at the financials, and you could look at the 10-year, the 30-year, or the 10-year. One or the other, and as you can see, they're both up pretty good, and they're very correlated to the 10-year, the TLT. As you can see here, they're almost identical. Look at the uptick right here. See that? Almost identical. Same type of divergence, lower here, higher here. Here, let me just draw it for you. There it goes. Lower, higher. No major difference, especially right here, especially around this area. Just look at this divergence. It's going crazy here. Anyhow, the point is keep your eye on the bond market. Now, in terms of the stock market, and again, I brought this to your attention the other day, and I'm bringing to your attention now. Look at 1 month. Look at information technology and look at communication services. They're higher. They're not lower anymore. And energy is taking backseat to consumer staples. Someone by the initials RS told you that may be happening. But look at it on a 5-day basis. Look at where consumer staples is, and look at energies, and look at communication services. It's above infotech and consumer discretionary. And look at yesterday. It says today, but this is yesterday. Communication services, right up here. So, and if you look at my CSI scan, which we're going to look at in a second, you will also see that look at on a cumulative basis, communication services is still the weakest one. But look at it on a monthly basis. It's now above consumer discretionary, and it's above real estate, right? So communication services is moving higher. That's the first time, folks, since January 6th or 7th, don't quote me, but something like that, since January, 85, 90 trading days, that this is happening. And this is important because the communication services, well, let me show you. A picture is worth 1,000 words. XLC. Look at the stocks that are part of this. And I showed this to you guys yesterday, but I want you guys to see this because it's not a fluke. It's now happening yesterday over a 5-day and over 30-day, and it's now above consumer discretionary and real estate. Alphabet, Twitter, Walt Disney, Netflix, all right? You've got 3 FANG stocks in here. Meta, Alphabet, and Netflix. That's like 20% of the market cap in the NASDAQ, and the NASDAQ, look at where it is right now. I'm trying to connect the dots for you guys. This is 2020, this is 2018, this is 2008. Look at where we're at right now. And this is the 200-day line. So if I put all this together, to me, it looks like the market is bottoming out, not just based on the fact that momentum levels are done, or the fact that volatility looks like it's going down, or the fact that the put-to-call ratio, which I'm showing you right now, which is finally below 1. Finally, it's below 1. But what's really important is this sector, which has a lot of market cap, Meta, Alphabet, T-Mobile, Verizon, Twitter, AT&T, Charter, Netflix. I think I've convinced you that it has a lot of market cap. So this sector is now not the weakest sector. And typically when you have sector rotation, when you have major sector rotation, look, I'm going to show you on a monthly basis. Let's go back 90 days. Look, 90 days here. Communication services, December 30th. Do you see that? I'm not kidding you. I'm not messing around here. December 30th, 2021. I wanted you to see this. And again, today, not yet on a cumulative, but getting there. Communication services is going up. That's the first time that's happened. And it only started happening like a week ago. So that's very, very bullish. And when you take that into account with the fact that the NASDAQ is way down here, and I could barely find a stock to short today. Today's Wednesday. I'm going to give you my top long, top short, but it's hard finding a short. Now, looking at sectors individually, let's look at it graphically. Energy looks like it's kind of choppy right now. Consumer staples looks like it's choppy and it's not moving anywhere. Materials looks like it's way overdone. Industrial looks like it's way overdone. Technology looks like it's way overdone. Financial looks like it's way overdone. Healthcare looks overdone. Utilities look overdone. Real estate looks like it's just in the crapper. Look at consumer discretionary, but look at communication. Yesterday did not break down. Consumer discretionary did. Financials did. Technology didn't. Look at communication. Communication didn't break down yesterday. The point is, there's definitely market cap coming into those stocks. So pay attention to the bond market and to the communication services sector, because right now, with the NASDAQ bottoming out, that may be the sector that starts leading the way. Now, I'm telling you this, today's the 11th of May. Let's see if I'm right. Let's see by the end of summer where the communication services are. Now, let's talk a little bit about global economy. Where's my global economy? And then I'll give you the top stock and the bottom stock. Labor Department will report consumer inflation for April today in about 28 minutes. Price trends help to shape Federal Reserve policy and interest rates, which in turn can slow economic growth by making borrowing more costly. That's why I said you got to keep an eye on the bond market. Surging inflation is prompting central banks and government in many countries to rein in support provided to markets and businesses during the height of the pandemic. Investors, in turn, are adjusting their asset allocation, as we have seen, to adjust that landscape. But I think they may be adjusting it back into the communication services, which is part of tech. Chinese shares rose after the government reported lower than expected price increases for the month of April. In annual terms, inflation was at 2.1%. So, moderate. The moderation of price increases gives authorities more room for stimulus spending to counter the impact of the shutdown because of the COVID outbreak that they're seeing. And they're hurting right now. And remember, China's a huge, huge, huge exporter. So if they're hurting, the world is going to be hurting. Treasury yields have been rising and stocks have been very volatile. You think? As Wall Street adjusts to the central bank's move to raise interest rates from historic lows to fight persistently rising inflation, which may be at the highest level in 4 decades, but it might have peaked out. Higher prices on raw materials, shipping, labor have been cutting into corporate financial profits, obviously. Many companies have been rising prices on everything from clothes to food, raising concerns that consumers will eventually cut spending, although it hasn't happened yet. Russia's ongoing invasion of Ukraine has pushed already high oil and natural gas and other commodity prices higher, while putting more pressure on costs for key commodities like wheat. Wheat prices are up 40% for the year, 40%. And by the way, there is going to be some shortages in oil. I think some of the third world countries are stopping bean oil production and so forth. So keep your eye on soybean meal as well, and soybean oil. Crude oil prices are up 36% this year. Now, let me give you guys a couple of stocks. I like Hormel. I think food is going to get tighter. I think we're going to start shipping Campbell's soup, Hormel soup. I think Hormel Foods. These stocks, by the way, have been coming up on my CSI scan. Here's Kroger, here's Kraft, here's Kellogg's. I know I saw it yesterday, so it can't be too far away. Hormel right there. And remember, there's 500 stocks on this list. So Hormel is definitely coming up, and also Campbell was coming up here. Here's Campbell. So anything that comes up here typically goes higher or stays here for a while. So I like Hormel quite a bit. I like how it's rounding the 50-day moving average, and I think it's going to go higher again. I like Hormel right now. And to the bottom side, I like this Bell Ring Brands. Now, I'm going to tell you guys something. It was very hard. It took me about 10 minutes to find a short. That's telling me that the markets are, in fact, near the bottom right here. So I'm just saying, be very, very cautious right now. I'm actually thinking of cutting that short that I have on Ross Stores out, even though it's down about 60%, simply because the market looks really overdone. But this stock looks like it huffed and puffed for a few days, and it's coming down right now. It's Bell Ring Brands. I don't even know. I mean, this stock is like nutrient products, Russell 2000, down 13% for the year. Earnings per share look terrible. PE ratio is high. Return on equity is negative. I mean, it's just a crappy company. Bell Ring Brands. I don't know. Go figure, right? But I would highly consider selling this stock. This stock looks like it's going to go from 24 all the way down to 20. And Hormel looks like it could test out the highs near 55 over the next couple of weeks. Now, before I let you go, I've got something important for you. Even if investors could figure out this market's insane volatility, there's still too many disadvantages to deal with right now. We've seen stocks rebound from similar environments in the past, but we don't know exactly when that'll happen. Now, momentum levels are pretty good. I'm early sometimes, though. So I've got to share one of my favorite rotational strategies that includes a hedge to help protect against downside moves. And boy, it's working. I woke up yesterday. The account was up 14% positive, the portfolio, and the hedge was up like 50-something percent pre-open. Pretty good, right? So folks, it doesn't matter if you're bullish or bearish because this has a built-in hedge. So I have to share one of my favorite rotational strategies, and it includes that hedge to help you plunge protection team. I love it. I think I got that from Jeff Zananeri. If you weren't able to watch the live presentation yesterday, you could still watch it now. There's plenty of times. Click the link below to access the replay and see how a hedge can help you in today's market. And this hedge is always there. It's dynamic. It's always there. You don't have to add it, subtract it. It's always there. And I love how this system works in volatility. Follow the link below. Tomorrow, top ETFs plus option pick. And if you can't find the link to the video, to see the class that I did yesterday, go to the YouTube channel, the Wealth Press YouTube channel, and it's in the descriptor. Have a great Wednesday, and send me love letters. Support at marketgeeks.com. Bye, guys. Have a great day.